minute and 46-second moment of silence beginning at noon today to coincide with the beginning of the memorial service to George Floyd. A new trading day has begun on Wall Street, and here are your headlines making the first trade front page. The funeral for George Floyd is scheduled for later this morning. Services will take place at the Fountain of Praise Church in Houston in about 2.5 hours. Activist Al Sharpton will be delivering the eulogy to the 500-person service before Floyd is
Good morning,
buried next to
everybody.
his mother. Meantime, 5 states are holding primaries today, including Georgia, Nevada, and North Dakota. They're going to be relying heavily on vote by mail due to the pandemic. This can be seen as a crucial test run going into the presidential election this fall. And new details today on just how COVID-19 is spreading. Despite prior reports, the World Health Organization says that asymptomatic people are not spreading the virus as much as it had previously thought. The group reiterated that asymptomatic spread can still occur, although it is, quote, still very rare. All right, let's take a look now at the market action. We saw that futures were lower heading into this session, and the Dow is now off more than 300 points to start the day. Let's say good morning to David Nelson. He is chief strategist at Bell Point. And David, always good to see you. We're also joined by Jared Blickery and Brian Sazi. So, David, just what do you make of this incredible ride, I guess I'm going to call it, the market's been on? I mean, yes, we're lower today, but this is after having clawed its way back from those March lows, despite all of the challenges that the economy and the world is facing right now.
What's up, Peas? What's up, bro? How you doing, man? Good morning.
Historic, and we can certainly debate, whether or not the rally has come too far and whether or not valuations have exceeded expectations at this point. But what isn't up for debate is the fact that we're here.
Yeah, man.
We're above the 200-day moving average.
I'm out here
starting to live there, and the slope
trying
of
to
some
get
of
this
these
money.
averages is actually pointing north. The last couple of weeks,
Hold on, let me change my mic
move
real
that
quick.
I've seen
One
is
second.
this, rush from one side of the lifeboat to the other side of the lifeboat, dumping your COVID stocks, dumping those large cap secular
All right,
growers,
cool. I had to change my mic.
Industrials,
all right,
some of the
so
cyclical names. Today it's giving it back.
What I do
point, but stocks
is
are saying right now that this comeback.
I do like a swing trade, which means
is real. And that
I do look at all of the stocks and stuff like that, but I like to catch them as they're going up and hit a support level.
The Trump re-election rally. If I count 6
And
months forward, which you all know,
like that
one,
I think one company was showing me yesterday.
that brings us to December. And to your point, the economy is in fact coming back to some extent. Is the thesis here? Economy comes back, and somehow the president gets reelected, and the tax rates stay lower.
I might need to restart my
the tax rate is a
program.
Big part of it,
Hold
but
on.
I don't think it's the bigger part of the rally here. This is
I think I can slow right
more
now.
about the fact that we've kind of gotten control over what we were looking at. Look, we know now, Brian, that April was the economic bottom. Clearly, it had to be the bottom because we were at a virtual standstill. We came to a halt. This wasn't a recession that came about because of excesses in the economy or some mistake by government.
I might need to restart my thing real quick.
And now we're coming back to life. And one by one, as communities go back to work, economic activity starts to pick up, and we start to get this rally. I'm sure Trump would like to put, see a better economy. It paints a better.
1 second, let me open that program.
Increases his election chances. But this is more about people going back to work and medicine getting a control of this.
Oh, wow. My trades got executed.
Hey, David, we saw some new data from
One, two,
Robintrack, which takes a look at Robinhood, the app, and they're finding that retail investors are running into this market.
It's loading
really
now.
The retail investor, not the institutional investor, that has been driving the rally. Yet on the other side of the coin, we see that investors are remaining pretty cautious.
1 second, let me check the trade I just got.
Keeping a significant chunk of their assets in cash.
I just found
something from Deutsche Bank saying money market assets remain at financial crisis highs at $5 trillion.
Log on back in.
So what do you make of those two bits of data that seems to paint a,
but yeah, I like to catch trades when they hit the support level. Like when you buying the trade, it has like the company that you were talking about yesterday. It's a good company to invest in, but trading wise, I'll wait till it come down because I like to catch them when they're going up. I don't want to get them and then they go down, then up. Because now they're wasting my time and my money. Now I gotta get done to take out. If that makes sense.
Some other large hedge fund managers underinvested professionals like myself underinvested at the bottom, and slowly but surely the market has dragged us back in. The retail investor has been, piling money into the market to a certain degree, but it's the institutional money that drives things in the long run. Make no mistake, a lot of institutions put a lot of money and a lot of capital back to work in the last couple of weeks.
David, I got a text from a friend last night.
Oh, look, already in profit. See, just that good.
Because that's not what I
My man raised no
I'm
fool.
not that guy. But I took
all right, that's one trade that's in profit.
Wow, you could see a lot of retail investors start to come back in this market and not do the right research, not do the right thing. Do you think this is starting to become a sucker's rally?
Maybe because the market kind of shaking up and everybody taking their money out.
Things, for sure. Look, we're going to have a retracement.
Let me give it some time.
At some point. But even if we had a 10% correction from here, it's not going to take us back to the March 23rd lows. I think that's been taken away at this point. We're not going to go below that at this point. I think for professional investors like myself, we have to look to 2021 because we have no earnings to really look at in 2020. And this rush from one side of the
but yeah, I like to for example, while this program continues to shake up a little bit, what I'm trying to explain to you is I don't want to get a company here, right? What I'm gonna do is I'm gonna market, right? And wait till this happens and then buy and catch it up like that. That's what I'm talking about. You know what I mean? So while it's in this area right now, I'm putting my money in the other companies, and then by the time it comes back down, I can take my money out the other company, shift it here, catch it up, take the money out here, put it in a different company, and buy that other company down.
What's driving us down today? Because
like
yesterday we
that's
saw
a swing trader. You want to catch the swing. Investing is when you just buy and hold and just wait for the company to go up.
Cruise liners were actually rallying. So what's the story today?
Yeah, we're seeing those very same travel-related stocks down considerably. Some of them.
Wow, I'm in profit on every single. I'm already 4% up.
Since we have an FOMC
2% up.
Tomorrow,
I just
not
bought.
a big surprise. So
let me see. Okay, I'm good. I'm good.
Standouts at Hertz is
time to pull back my I
believe it was
application. I ain't going back to college again
already. And United is down. Americans down as
Let's
well.
Go.
7.5%.
I'm back in America like I never left these cats.
You can see those big
shoot,
like Apple, Alphabet, Facebook, Amazon. Those are all outperforming today. A stark reversal from what's happened over the last 3 weeks.
So good. So far, so good.
Posture here. Those high-flying industrial names and
see, I'm up on all these trades. What's these ones? These are just
that have done well over, say, the past 18 days now since the leg of this last.
Damn, I'm good already. I bought. Look, right now. I had to hurry up and get some trades because I knew the market was shaking up. So I went ahead and set limit. Okay, so remember when I was trying to explain to you guys about buying limits instead of just buying it at market price? Because what happens is you want to buy it when it hit a certain point. You don't want to just buy it right then and then. You know what I mean? Because by the time your hand goes through the motion and press the button and then press yes, buy now, it's changed. If that makes sense. So what you do, you set limits, right? Like for example, Spirit Airlines. I'm going to Spirit. I have a limit set for Spirit. If this thing will load, man. All right, for example, I got a Spirit. I have a limit set for Spirit at $21.85. So when it taps that price, then I get in.
Is it a second wave of the virus?
If it don't tap it, then I don't get in. That's
tensions between the U.S. and China.
I do that.
Bubble there in the background. What do you see as the thing that could trip us out?
So I set all these up today, and so far I got in 1, 2, 3. Look, 3, 4, 5 of them, and I didn't get in 1, 2, 3, 4.
I didn't. This election is going to be the most divisive in a generation. As we approach November, you're going to see huge swings in sector performance. You're going to see rushes in and out of healthcare, depending on the polls. You're going to see rushes in and out of energy. You're going to see even big cap tech will be controversial. China, big issue for us because now it's not a question of if, it's now just a question of how fast. We're in the early stages of decoupling our economies. And frankly, both candidates right now are trying to paint themselves as being more tough on China. And I think that resonates with the American public as a whole. And finally, is the virus. You just brought it up. We could have a resurgence. I was just looking at some data this morning. 12 states right now are reporting an increase in the infection rate. That'll give the market.
Sometimes the websites the company be going slow sometimes.
From one side of the lifeboat to
Let's see what this one
I think
right
in the
now.
end, investors going to find somewhere sitting in the middle is going to be the best place to be.
Damn,
all right, David Nelson
I hate how I
missed. Asset Management. Always good to see you. Love the guitar in the back.
I want this one so bad.
Play it at some point.
Okay, thank you so much.
Thanks a lot. And stay with us. Coming up next, how are we taking our vacations this year during the pandemic, if at all? RVs are hot right now. We're going to talk about it when we get back.
I'm glad I got back in American Airlines though. They got that R down there because they know it's having a bad day, but they ain't having a bad day for me. I'm in there. I'm in 2 airlines now. Oh, you know what? I'm in 3 because I got in Southwest too. So this morning I got in Southwest, Delta, Royal Caribbean, and American Airlines. Damn, I did a good job on that, boy. And I got in Citigroup. Let me check on Citigroup. I think that's Fortune 500, Fortune 30. I think this is part of the US 30. I couldn't lose here. I think this is part of the US 30 company. I'm gonna take profits on some of these cats when they hit their top. I don't know. We're gonna see. The only time I ain't gonna do that is if the market open with a gap above my take profit. Man, I'm glad I got out, man. Like something told me to get out. I had that feeling, man. I said, yo, I need to do something about this.
You can say the RV industry is having its moment. The world's biggest RV maker, Thor Industries, posted a blowout earnings report yesterday, beating on both revenue and earnings. And with the coronavirus pandemic still weighing on all of our summer plans, consumers are looking to the RV market for a new way to travel. Joining us now is Thor Industries CEO and President Bob Martin, joining us from his home in Indiana. Hey, Bob, that's a pretty sweet Mercedes-Benz RV you've got there behind you. I have to think that's your top-of-the-line model. Tell us what things are looking like here as we head into this summer. What kind of an increase have you seen in demand for RVs?
You know, it really started about 4 to 5 weeks ago as more states started to open. And we started to see a real trend for our smaller units, our smaller travel trailers that price point around 15,000 less to 30,000. And then every week it got a little bit stronger with more of the openings and people showing up to our dealers' lots. And the trend got a little higher every week to where this Mercedes-Benz chassis Delano Class C from Thor Motor Coach is really
we out here, y'all.
Mid 150, so it's one of our mid.
We out here.
We have motorhomes that go up to $800,000 from our Integra line. Airstream trailers, they're anywhere from $70,000 to $100,000. But Airstream in May had their best month ever in the history since we've owned the company since 1980. So it's really all over the board.
Bob, that looks like a serious machine behind you. And how's the Wi-Fi in that? Because you made it a point to note on your earnings call that it might be used for working from home this summer. A lot of people might go into the motorhome industry because they can travel around, get their work done since they're not taking vacations via airplane.
Yeah, most of the units we have different suppliers that supply the antennas, but the antennas now have 4G Wi-Fi in them. And so people can work virtually anywhere, whether it's Zoom calls, the world has changed, but there's a great workspace in this at a dinette. And many even smaller than this, they have just a small table that we'll put in just for the laptop.
Bob, are you seeing a lot of new customers coming into the
I'm
space?
already up $2,000 for the week.
Never thought of owning
an RV. Just started. Let's see what and I wasn't even. I took profit yesterday, so I ain't really had nothing in the market.
Yes,
now I'm back.
From all over the nation.
Like I never left.
Typical, you'd have a couple from they'd have a home up north, a home maybe in Florida, and they didn't want to fly home. So they were coming into our dealerships and buying a unit just like this. And one of the other benefits to
look,
having
Norwegian.
an RV
Let's
is
see what
you
this
can
one's talking
travel with
about.
your pet. And so many people didn't like to fly with their pet. And now, you can literally go from Florida all the way to Minnesota. You have your refrigerator full of your food. You have your own bathroom, your own sink, shower. You can sleep in it.
Damn,
All
I
you really
missed
have
it.
to stop for is gas. And so we're seeing this trend, and
I
it's more and
missed
more
it.
new buyers. And when they come in without a trade-in, and they're
I ain't
also
getting it
a
right here.
younger
I don't like
demographic
that.
as well. So
But
it's been
I
some
mean,
great things that we've seen
it's
since
not
this has all
bad.
started.
Bob, how would you grade?
I'll
What
take
grade would
this
you
at
put on demand over the
24.6.
past four
I'll
weeks?
do that all day. Let's do it.
The last 4 weeks has been an A plus. Just the retail demand has picked up tremendously over the last 4 weeks. So it's hitting a point where dealers. We started this year. Many dealers were up double digits, January, February, and then when
Let's
the
go.
pandemic hit in March, everybody shut down for 4 to 6 weeks, and it came back quickly. And so demand has built over the last 4 weeks to just a frenzy, to where right now we're just trying to get dealers their inventory.
I don't know if your dealerships are open for in-person viewing or, riding of these things. People want to check out their RV before they buy it. It's a big purchase. Are you selling them online? Are people actually able to gain access to the physical RV?
Yeah, so they started off, many were online when they were, at the state shut-ins. But now as states have opened up, it's very controlled, depending on the state. But there are some where they'll set an appointment. They'll wait in their car until their appointment is up, and they'll social distance with the dealership. And it's just a very safe way to go in and, look at the RV one-on-one. And so right now they've really figured out how to do it in a controlled fashion.
Talk to me about resale value for these RVs, because I've heard, what they always say, once you drive a car off the lot, it already depreciates. What happens with an RV? This is a big purchase. What's the secondary market look like, and how much of their value do they lose on the secondary market?
It is similar to, a car. When you drive, an RV off the lot, there is, it's a depreciating asset. It's maybe even a little bit more than a car, but it depends on the market itself. It changes every year, every month. And we look at auction sites, we look at the used market. And right now, when this started, the used market started before even some of the entry level new. So right now, trade-in values are actually higher because dealers need the used inventory. And so it really always depends on the market conditions. So right now, for those customers that have a used unit, their value is going to be higher when they go to trade it in.
Bob, real quickly before we let you go, you're a global company, pretty important acquisition from you within the past year. What are you seeing in some of the harder hit COVID-19 areas overseas in Europe? Has demand started to come back a little bit?
Yes, probably Italy was the toughest. We do have a factory in Italy, and that one had an extended shutdown, but it is up and running now, and very much in a controlled fashion. Germany is the strongest market of Europe. The German demand, even while we were shut down, customers were calling in trying to find out when they could get their caravan, because it's very much part of the lifestyle over there. And they really wanted to get out and travel. Now it's different because they'll have to stay within their country for a while, but people are promoting, discover more of your own country rather than going across borders. So UK is probably harder hit than most, and we're looking to start up production there. But 8 of our 9 factories are up and producing, and demand has been actually very good. So we're happy with both sides of the water.
All right, Bob Martin, CEO of Thor Industries. Thanks for being with us. Enjoy your drive in that Mercedes Delano.
Thank you very much.
All right, stay with us. More of the First Trade right after this.
All right, chat, I'm back. Today is a wonderful day for me. I'm sorry for the rest of you guys. Let me check, make sure I got. I ain't got no. Let me see. Do I need to? I don't think I have any more money left. I'm just using margin at this point. Let me double check to make sure I'm right about that. Yep. No more money left. Just using margin. I got you right here. Today's a good day for some of us who didn't get greedy. If you got greedy, that's on you. If you got greedy. Oh, let me check my Robinhood account. Y'all supposed to be reminding me, man. Let me check my Robinhood, see what we're looking like.
Stocks taking a little breather here after yesterday's big rally. We've got the Dow down now more than 330 points. Looks like Joe Biden is hitting President Trump where it hurts. The Democratic presidential nominee says Trump, quote, squandered the longest economic expansion in history that he says the president inherited from the Obama administration. Yahoo Finance's Rick Newman joining us now with this one. So, Rick, yesterday, President Trump was busy tweeting about the economy, taking credit for what seems to be the start of a bounce back. What did Biden have to say exactly?
Oh, he issued a statement. This was not a big speech or anything like that. He just put out a statement basically saying, well, we now know officially the expansion that began during Barack Obama's first year in office officially ended in February. So, I mean, that's technically true. The National Bureau of Economic Research did say the expansion, which was almost 11 years long, longest on record going back to the 1800s, it ended. So that means we're now in a recession, or we were in a very, very short recession. So Biden is technically correct when he says when he says, look, the expansion ended under Trump. It's a matter of voter interpretation whether Trump actually squandered the economy he inherited. And I think this just becomes a Rorschach test. Whatever your pre-existing view is, if you think Obama deserves credit for the economy, you'll credit Biden. And if you think Trump deserves credit, you'll credit Trump. I'm not sure it's going to make a lot of difference on election day.
Rick, but wouldn't, just to play devil's advocate here, wouldn't the president win the economic debate before the pandemic hit? Growth was looking pretty good. We had some of the lowest unemployment levels around. I can't necessarily say that was the case during the when Biden and President Obama were in the White House.
Yeah, you're right, Brian. And even now, when pollsters ask voters, who do you think would do a better job on the economy? Voters give Trump the edge by a few percentage points there, even though they like Biden better than Trump overall. So a big issue for the next 5 months as we head into Election Day is who's going to do a better job convincing voters that they can get this economy off the floor. Trump does have an advantage there because people do associate him with tax cuts and deregulation. And they do know that Biden does want to raise the corporate tax rate, for example. But, I think Trump's pretty vulnerable because, look, I mean, we still have something like 40 million people out of work. So that alone means that if you're asking yourself, am I better off under Trump? A lot of people are going to be saying no. So there's an opportunity there for Biden to convince people he could do a better job on the economy than Trump, but it's not going to be automatic. He's going to have to earn that.
And what about the polls, the latest polls, Rick? Are they showing that Biden still has a pretty wide lead over Trump?
Yes, Trump is actually slipping in the polls. I mean, he had a terrible week last week with, cracking down on the protesters outside of the White House in Washington, D.C., the photo op with the Bible at the church, all of that. One poll, CNN poll, actually showed him falling under 40% approval down to 38%. And in aggregates of polls, he has slipped all the way down to about 41%. So that is getting below the relatively stable range he's been at. So, everybody keeps pointing out there's still 5 months left until the election, and a lot can happen. And we do see some, it's possible there could be a turnaround in those polls, but things are not working in Trump's favor right now.
All right, Newman, thanks very much. One thing that could be working, when Trump's through is the stock market, right, Jared? Because an incredible run up since the lows we saw in March. We're lower today, but the S&P, I think, is it barely hanging on now to being in the green for the year? And the NASDAQ had its first record close in 4 months.
Yeah, it looks like the S&P 500 is now down 1% for the year, but I don't think we've seen the last of this rally, just taking a pause right now. But you mentioned something really interesting because Keith Bliss, who we had on the show yesterday, was talking about August 5th being a key date. If stocks are up over the 90 days leading into that, it has been historically a good predictor of whether the incumbent will retain the seat. So we'll have to keep an eye on that. But just kind of looking at the market today, let's take a 5-day look. And we can see here on the Dow just dipping into Friday's territory. This would be Friday over here. And here's the low of the day, not really retreating that much. S&P 500, similar story. NASDAQ outperforming today for the first time, it seems, in weeks. And that's in large part because of the 10-year T-note yield, or at least concurrent with it. We're seeing it down 7 basis points today. And it has advanced quite a bit over the last few months. Also, the U.S. dollar index had been up earlier, but it's now retreating again. So it looks like it's going to be down for 8 of the last 9 days. And that's very supportive of the risk rally that we're seeing right now. Here's a year-to-date look at the U.S. dollar index. Now let's take a look at some heat maps, and we can see the NASDAQ, those big mega cap stocks in the green for the most part. We do have tech and communication services outperforming. So that would include those FANG stocks. Microsoft is down 0.9%. Notably, software really not doing that well, even though we do have tech advancing today. Also want to see if the chip stocks can lead here, something that we haven't really.
Norwegian is so close to my entry
over the last few weeks. Here's a look at the Dow heat map, and we can see the industrial, financial, and energy names that have been the high flyers over the last few weeks, kind of in the red right now. Boeing's down 6%, JP Morgan down 2.5%, Chevron down about 2%. And just taking a quick look at our sector leaders, only healthcare is in the green right now, Alexis.
All right, Jared, thanks very much. And we want to show you some live pictures now of outside the Fountain of Praise Church in Houston, where 500 people are expected to pay their last respects today to George Floyd, beginning at noon. And at noon, the New York Stock Exchange is going to have 8 minutes and 46 seconds of silence in honor of Mr. Floyd. That's how long the officer had placed his knee on Floyd's neck when he said he couldn't breathe. Stay with us. We have much more of the first trade.
Damn, you know that George Floyd thing serious on the stock market about to pause. That's crazy. I might get out this Eli Lilly. We'll see. That's fine.
All right, welcome back to the first trade. I am, of course, still joined by my co-anchor Alexis Christoforous. Right now, we're seeing mourners starting to arrive at the Fountain of Praise Church in Houston for the funeral of George Floyd. It will be live streamed around the world starting at noon, and the New York Stock Exchange will hold a moment of silence for 8 minutes and 46 seconds in his honor. We will bring that to you live at noon, also here on Yahoo Finance. But let's get right back to the markets here and bring in Inez Ferre. Inez, Tiffany out with earnings this morning, and the one stat that has jumped off the page, I think, to a lot of folks, sales in China, red hot.
Brian, that's the highlight of the company's report, saying that in May, retail sales in mainland China were up approximately 90%. This is despite global net sales being down approximately 40% for the month as compared to May of 2019. So right now you're looking at Tiffany that's up more than 2%. Also taking a look at Signet Jewelers, that stock is down more than 15%. This is after the company reported a loss per share of $1.59. That's better than what the street had been expecting. The same store sales were down 38.9% because of the temporary store closures. The company is temporarily suspending its dividend program. I want to mention Chesapeake Energy because that stock was halted for trading. This is because of news pending. Now, Bloomberg had put out a report that Chesapeake Energy may be preparing to file for bankruptcy. And then just taking a look at IBM, that stock is down more than 3%. IBM says it will no longer offer facial recognition products. CEO Arvind Krishna, in a letter to Congress, says that the company is opposed to using facial recognition for mass surveillance and racial profiling. And he also outlined some policy proposals for racial equality in the U.S., Brian.
All right, Inez Ferre, thank you. I'll stay on the markets here and bring in Quincy Crosby. She is Prudential Financial Chief Market Strategist and a friend of the first trade. Quincy, always good to see you this morning. We're seeing the market under a little bit of pressure this morning, but clearly this main story here is this market rally. And as you take a step back, do you think we're seeing a Trump re-election rally under the guise that the economy does in fact snap back and come election season, the polls that we're seeing right now with Joe Biden in the lead are not the case?
Well, this is interesting because moving into this week, as the market moved higher, you started to see put buying closing in on the election more than you would normally see. Now, we've started to see a lot of call buying, but going forward, it was based on the notion that you could have a Democratic clean sweep. So if we start to see a pullback in those put purchases or the options to hedge on the S&P 500, it would suggest that because the market has been very nervous about a clean sweep come the election day.
What about the Federal Reserve tomorrow, Quincy? Is there going to be any material effect, do you think, on the market, or would Fed Chair Powell really have to surprise this market with a hawkish tone in order to trip it up?
He would have to do that, and he does not want to do that. The equity market is a major part of the financial conditions as the Fed sees it. They don't want to do that. They don't want to surprise the market. However, I think they do want to bring that yield down because that's been part of the recoveries, to have those yields down at zero bound. And the other thing is the housing market. That has been one of the best performers since March 23rd. Mortgage purchases are up, and they have been up for some time as Americans go to take advantage of these low rates. So I don't think they've got, and that presents a tightrope for the Fed. I think they're going to be able to walk that tightrope because look at what they've done since March 23rd. They are responsible for bringing this market off of that March 23rd low.
And Quincy, the follow-up there is, will the Fed be responsible for sending this rally right down the drain? Because you can make the argument it's their stimulus that has potentially inflated to the market to the point where it's not properly capturing in the recovery in the back half of the year.
Well, exactly. It is a tightrope, but their view, I think, has been, look, we'll take care of that. But right now, we're all in. Now we'll do everything it takes to keep this economy from declining even more and pushing it towards something deeper than a shallow recession. So I think they're going to be very, very careful. And the next question is, what does the Senate do in terms of a package? There too, the president knows more than anyone this is an election year. Take care of small business owners, take care of the consumer. He wants those votes. He doesn't want to lose that.
Hey, Quincy, there's a note out this morning from Nomura that I was looking at that says, without a vaccine, consumers and businesses are going to remain cautious. They don't believe we're going to get to pre-pandemic levels in economic activity until possibly 2022. Would you agree with that?
Well, it's very interesting. There's a report, I think it was first posted by the New York Times, where they went and talked to and had the survey by epidemiologists, asking them when they would be prepared to go out. And they gave them various categories. The epidemiologists were very careful, very conservative about when they feel comfortable about really engaging in economic activities and social activities. Every survey that we have seen shows that the majority of Americans, regardless of party, are very concerned about truly engaging in economic activity and social activity until they feel safe. So again, we need to see those numbers come down. And I think that would correlate with consumer discretionary even getting more of a bid than it already has as America has started to open.
Quincy, should retail investors, should they feel safe getting into the market? And if so, how do they get into a market that is clearly getting a little bit frothy here?
Well, we've seen call buying from retail investors. I mean, that's part of the concern regarding sentiment, that perhaps it's just too sanguine, too feeling the sky's the limit on the market. You don't want to see that, but nonetheless, a healthy pullback is just that. It's a healthy pullback. The market is overbought by any metric right now. And the question is, do we see just a normal consolidation? Is it sideways? Is it time? Or do we see something more meaningful, like a 5 to 10% pullback? A lot is going to depend on how the economy is opening and the state of the virus. This is what makes this all very, very different. We're seeing cases rise in pockets of the country. Does that lead to hospitalizations? Does it lead to deaths? This is the next focus for the market.
If that's the next focus for the market, where should people be concentrating their money? I mean, we saw this rotation now out of tech, maybe not so much out of tech, but at least into other areas, yeah. Right? The breadth of this market has become, I think, a lot more healthy over just the past few days.
Yes.
So where do you see money rotating to, if at all, as we sort of brace for what could be a second wave?
Well, it's interesting because it is a big what if, but nonetheless, I think you're going to see, as big tech, mega tech sells off, you're going to see investors go right back there. Companies with strong balance sheets that are going to do well, regardless of a potential shutdown or lockdown. But also, I think you're going to see the housing market, because then what you would see was the 10-year Treasury yield come back down, making mortgages much more attractive. And we saw even during this lockdown that the housing market started to pick up with those purchase applications, enjoying the low rates. So I think we would go there. And also, you can't ignore the fact that the market has been broadening. And so perhaps if we don't see, the market caving to the potential for the virus spreading and hospitalizations and deaths increasing, I would continue with consumer discretionary, and healthcare has been sort of consolidating. I'd go back in there. You want to see these consolidations. It should bring more investors back into those parts of the market. So tech, healthcare, consumer discretionary. And I'd have to say, if it does look as if we are headed towards some major concern about the virus, I would suggest that we go back into those consumer staples, the Spam, that's Hormel, obviously Hershey, Clorox, Campbell Soups. They will get a bid. There's no doubt about it. They work beautifully. They gave up part of their move to the consumer discretionary, but I would actually look back there because I think the sell-off has made them attractive if we continue to stay at home.
All right, let's leave it there. Quincy Crosby, Prudential Financial Chief Market Strategist. Always good to see you. We'll talk to you soon.
Thank you.
All right, do stick around. Much more ahead of the markets on the first trade. All right, welcome back to the first trade. It should know we have an IPO coming out today in this pretty much red hot market. Vroom shares of the online car agency up, indicating to open $35 a share. This stock priced at 22. Alexis, talk about froth.
Yeah, lots of momentum, lots of new companies coming to market this week and next. All right, switching gears here now. Employees at Adidas and Estee Lauder are looking for real change from the higher ups, from the C-suite. They are asking executives to directly confront racism and promote diversity within their companies. Yahoo Finance's Kristen Myers is joining us for this one. So, Kristen, first off, what have Adidas and Estee Lauder done thus far to address these issues?
Hey, Alexis, good to see you this morning. So obviously, as we were talking about just a little bit ago in the break, these are two completely different companies. So first, I want to talk about Adidas. So the company has tweeted out messages about racism, and a lot of its employees are pushing them to say, listen, that's not, when you look at their C-suite, when you look at their board of directors, they have no person of color at all in some of the higher leadership. So they presented, the Adidas employees presented what they're calling a state of emergency to their executives. And they're actually calling for an increase of representation of Black and Latino employees at every level of the organization. And they want that bumped up to 31%. Now, when it comes to Estee Lauder, they've actually made a commitment of $1 million to the Black community. Employees there say that's not enough. They want an increase there up to $5 million. They're also calling for the removal of Ronald Lauder from the board. Obviously, the company Estee Lauder was founded by his mother. And the reason for that is because of his donations and his fundraising for the president. And they say that the president's policies, the president's administration essentially runs counter to the messaging of social inclusion and diversity that Estee Lauder supposedly espouses. So those are some of the two changes that they want there at those two big companies. The overarching theme here, however, is that these employees are saying, look, particularly when it comes to Adidas and other, sportswear and apparel companies, look, you guys are profiting off of, Black culture and Black community. You need to be doing more to give back.
Kristen, we had Katie Kochman from Goldman Sachs yesterday, and she made some great comments on, if the companies do not drive enough diversity, they're just going to simply sell their stock. And good for her for saying that. But she said they don't have the stats. These companies are not putting out stats on their diversity. Do you think these companies need to pick it up here and start making these disclosures?
No, absolutely. There's a reason that these companies don't put out statistics. Nike, Adidas, Under Armour, these are not the only companies that are having a problem. We've talked about this a lot when it comes to the tech industry, for example. Frankly, you are just not seeing across the board a lot of Black and brown faces at the top when it comes to the C-suite, when it comes to their board of directors, but even all the way down to just their basic employees. Frequently, employees are saying, listen, we are not seeing enough faces of color inside the organization. We're not seeing enough faces of color advance through the organization. Some companies like Google have recently started to, release those statistics, and they're pretty damning, Brian. I mean, a lot of these companies, frankly, just don't have enough diverse faces within. And I think that now that everyone has been protesting and everyone is starting to say, listen, we care about your corporate social responsibility. We're actually caring about these issues of social justice. Some of these companies are going to have a huge reckoning going forward. They're going to have to find that, listen, folks are, as you suggested, going to sell their stock. People are going to leave and move over. Frankly, a lot of CEOs are coming out and saying, listen, diversity is not charity. Diversity is actually good business practice. Hopefully going forward, we'll see some of these companies really start to follow suit with some of those measures.
All right, Kristen Myers, always good to see you. We'll talk to you soon.
Of course.
All right, do stick around. We'll be right back with a company to watch here at Yahoo Finance, watching Macy's after a big debt raise on their part as they try to survive the COVID-19 pandemic. Do stick around. All right, welcome back to the first trade this morning. Let's take a look at Macy's here and bring in Inez Ferre. Inez, a big day for Macy's. Their communications chief telling me via email today they start curbside pickup at their pretty large and very important Herald Square location in New York City.
That's right, Brian. And CEO Jeff Jeanette saying that so far the curbside pickup, they're expecting this to trend of curbside pickup to be good for the company to continue. Look at Macy's right now; it's up about 0.5%. But just take a look at the performance over the last 5 days. You can see over the last 5 days, the stocks really rallied up 37%. Over the last 18 days, stock up 91%. But here, year to date, you can take a look at the performance, down 43%. Now, Macy's has raised $4.5 billion in funding for its operations to continue through fiscal 2021. So basically, analysts are saying that this means that the company isn't really at risk of bankruptcy right now, as it has been able to secure this funding. And it also came out with preliminary numbers forecasting its performance for the first quarter, forecasting sales will drop $3 to $3.02 billion. That's down from $5.5 billion a year ago. And CEO Jeff Jeanette saying our reopened stores are performing better than anticipated. Our strong digital business sales trends continue throughout May. Also seeing some strong sell-through of seasonal merchandise and anticipating that the company will exit the second quarter in a clean inventory position, saying the holiday season will be crucial. So certainly a lot of attention will be paid also today when it holds a virtual conference with Cowen on the new retail ecosystem and really what this new retail ecosystem looks on the other side of the pandemic, which is certainly different from prior to the pandemic. Brian?
Yeah, that much is for sure. Inez Ferre, thanks so much.
Thank you.
The national conversation following the murder of George Floyd has revealed a stark reality. Black Americans are missing from most corporate C-suites. Right now, there are only 4 Black CEOs at Fortune 500 companies. And a survey conducted last June by the Center for Talent Innovation found Black Americans make up just 3.2% of senior leadership roles at large companies in the U.S. So why aren't American companies doing better at this at all? Let's bring in Janice Usare, and she's the founder of DWG Business Solutions. Janice has worked with companies like Papa John's, PayPal, Nordstrom on diversity issues. Janice, good to see you this morning. So why do you, as you work with these companies, you get in there and you understand what their operations are and their culture in these companies, why aren't they doing better?
Hi, Brian. Thank you so much. So I think that there are a lot of different factors, one of which being an unrealistic expectation of how long change actually takes. Companies bring me in typically to do workshops and trainings for employees, and there is this expectation that after the training or workshop is complete, that employees will be completely transformed. Most of the problem is that this is the first time I'm being brought into the organization. So if you're only doing a one time a year, one-off training or a workshop, it's not going to produce long-term effects or long-term results. So I think that there needs to be a lot more realisticness with what the training and workshops can actually do. And there needs to be more consistency on these companies' part.
You know, Janice, you actually came up with some real actionable things that companies can do to make their workforce, especially their C-suite, more diverse. And one of the things you are proposing is getting rid of that popular referral program, right? Oh, yeah, look, my friend is really qualified. They'd be great for this job. And then the company typically gives them a perk for bringing that person in. You say we should get rid of that policy. Why is that?
Yeah, and thank you, Alexis. So the reason is because referral hiring typically leads to a homogenous group within the workplace. So if I am asked to refer other engineers that I know, if I'm a white male, there's a high likelihood that I know other white males that I can refer. So if the goal is to get a diverse group of people, referral hiring does the opposite and often causes a echo chamber of the same types of employees being hired and referred into the organization. So I think that there, and another problem, Alexis, is that a lot of organizations don't actually use their diverse referral hiring program that they have. So if you're having your diverse employees refer other diverse employees, but you're not hiring from that pool, it can leave employees kind of feeling like your words are not authentic.
Janice, how much measurable change do you think corporate America can make within the next year? You know, the fact is, a lot of the board members are very much entrenched. It takes time to get them booted off for whatever reason. It takes time for management teams to change. When does that change start to happen?
What we're seeing right now, Brian, is really exciting for me because I've been getting requests. I've been inundated with requests for racial equity workshops. So I think that talking about the issue is the first problem. When I'm brought in to do workshops, racial equity is typically what organizations don't want me to focus on. Usually it's emotional intelligence or something like microaggressions, but I see a lot of promise right now. And I think that understanding that it takes more than one workshop, and I'm not a huge fan of unconscious bias trainings. So it takes learning that you have to be doing multiple things. And I think that because this is the focus of the national conversation, that change will actually start to happen. And I think it was promising that earlier this year, Goldman Sachs said that they're not going to take a company public unless they have a diverse member on their board. So I think that once Goldman Sachs said that a lot of companies will start to follow suit.
Yeah, we actually had Katie Koch from Goldman Sachs on our show this week talking about just that and saying that they don't have a problem divesting themselves of companies that they don't believe are doing the job when it comes to diversity. But I want to get your take on what we're seeing happen right now. Lots of companies very publicly saying they are giving millions of dollars to social justice programs as we see civil unrest in our country once again. Is that the right message? Should they be using those resources perhaps to have change happen from within their own companies?
Yeah, and that's a great question, Alexis. I think that for a lot of employees, it seems like their companies are being a little bit inauthentic because while in one breath they're preaching that Black Lives Matter, in another breath their organization is not diverse and there's no diverse representation in leadership positions. So I think that a large part of it is that I'm really happy that this national conversation is happening. But what is really going to take changes is putting that money into things like mentorship and sponsorship programs, because there's research that indicates that for diverse employees, mentorship and sponsorship in particular helps with their career progression. So in addition to workshops and trainings and things like that, also investing in your employee resource group. A lot of times when I'm brought in to speak to a company, it's through an employee resource group. However, they tell me that they don't have a lot of funding and that they have a very small budget. So if you have an employee resource group, making sure that you're also giving them adequate funding so that they can bring people into the organization to have keynote talks and to do events and things like that. So I think that half of that money should be invested in these nonprofits for racial justice. And the other half should be, it's important to make sure your house is in order before going out and trying to fix other people's houses.
Janice, we were just talking about lots of companies refusing to put out their diversity metrics. What's your advice to those companies that are still not doing so? Isn't it better to finally rip the Band-Aid off here, get it talked about on social media? It may hurt, and it should hurt, but isn't it time now to drive change, get those numbers released, and do a better job?
Yeah, definitely, Brian. So that was my main qualm with a lot of these tech companies. Every year since 2015, the Googles and all of these large tech companies have put out a diversity report. But what you don't see is they show you the turnover numbers and they show you the how many people are currently in their organization in diverse groups, but they don't show you whether those people actually stayed the following year. So people want to see that. And like you said, Brian, it's important to just rip the Band-Aid off because the public likes transparency. If you make a public statement and say, you know what, we haven't been getting diversity and inclusion right in the last few years, but we're committed to making changes here in an effort to be transparent. here are our numbers and our percentages, the public would appreciate that. And while they would receive some criticism, it shows that they're authentic and that they're trying to make a change. I think that the secrecy is what bothers people, especially the employees who know what the company culture is actually like.
Really well said there. Janice Gossam-Usare, founder of BWG Business Solutions. Good to speak with you this morning. Very important work you're doing.
Thank you so much, Brian, and thank you, Alexis.
All right, do stick around. We'll be right back with much more on the markets on the first trade.